Hey everyone, welcome to the session. We are going to discuss about the finance paper 2025 of the RBI Grade B examination, right? And there I'll be sharing key takeaways for the 2026 as well. Okay, so this is the finance 2025 solved paper. Let's quickly start the discussion. So guys, whatever lectures are happening on the YouTube, you can definitely download the PDF of the sessions of the YouTube by downloading the Olive Board application, right? You can download the Olive Board application. There will be getting all the updates related to the regular live classes on YouTube as well as the PDF. In case if you are having any query related to finance, you can definitely reach out to me as well. My Telegram ID is CA Pratik Finance. If you type CA Pratik Finance on Telegram, you will get my group link. Okay, so the very first question that came in RBI Grade B examination 2025 was the JAM Trinity stands for. So it was a full form of JAM Trinity, and this is a very simple question. Why? Because this is related to financial inclusion. The correct answer is option A, Jan Dhan, Aadhaar and mobile, right? Jan Dhan, J for Jan Dhan, A for Aadhaar and M for mobile. So that's JAM Trinity, right? And it is a financial inclusion framework. Okay, a very simple one. And one request from my end, guys, whenever you are watching this lecture, please do comment when I am reading the question. Please do let me know the correct answer as per your opinion. Okay, the next one, the contingency fund of India is presently authorized at how much? 5,000 crore, 10,000 crore, 20, 30, 50,000 crore. Which should be the correct choice here? So let me know in the comment section, guys. What do you think is the correct choice here? The contingency fund of India is presently authorized at, the correct answer here is, guys, option D. Option D, 30,000 crore is the contingency fund of India presently. Okay, to meet the unforeseen expenditure, that's what the main purpose is for creation of contingency fund. Acha, tell me this one, SEBI's T+2 timeline is applicable for which of the following instrument, right? Or I will say issue. IPO allotment only, right issue, bonus issue, share buyback, preferential allotment. So this is a SEBI related news, and RBI loves to ask SEBI related news as well. So it's not like that you just have to read the RBI related news. You need to have special focus on the SEBI related news as well. Okay. So guys, IPO allotment, we all know that the IPO timeline was moved from T+6 to T+3. So there is a separate IPO allotment procedure, and the IPO listing timeline is T+3, right? The correct answer here is option C, bonus issue. Bonus issue. So SEBI has actually prescribed T+2 timeline for the credit of share in case of bonus issue to the shareholders to enhance the efficiency and convenience to the investors. And what do you mean by this T+2? Basically, it is a settlement cycle of SEBI. So transaction date plus within 2 days your transaction is going to be settled. That means you will be getting your bonus shares within 2 days from the end of the transaction date, right? And as of now, we are transitioning towards T+0 as well. The top 500 companies are allowed for optionally choosing T+0 settlement as well. The next one is capital adequacy ratio. A very simple question from the static portion, a very straight question. Capital adequacy ratio primarily measures what? Bank's profitability, liquidity position, bank's capital in relation to the risk weighted assets, total deposits to the total asset ratio, or credit growth rate. Which of the following is the correct answer here? Which of the following is the correct answer here? Capital adequacy ratio, which is also called as capital to risk asset, CRAR, right? The whole idea is capital divided by the risk weighted assets. So whatever your capital is, whether it is sufficient as compared to the risk weighted assets, right? That's the formula of calculating the capital adequacy ratio, and here the correct answer will be option C, bank's capital in relation to the risk weighted assets. Now capital most of the students can understand, but what is this risk weighted assets? Now as a bank, what is your asset? A bank is giving loans and advances to different entities. So let's suppose bank has given loan to Mr. Ambani. Bank has also given loan to Mr. Mallya, Mr. Vijay Mallya. Bank has also given loan to an MSME entity, a small business or a medium scale business. Okay. So that's what the structure of loans and advances, and the loans and advances are asset for the bank. So in the denominator you can see risk weighted assets. Why we are giving risk weights to these assets is every loan, definitely every loan is an asset for the bank, but every loan is carrying different amount of risk. Every loan carries a different amount of risk, right? So the loan that I have given to Mr. Ambani is, I will say, not so risky. Might be the bank has also given loan to government, then in that case there is a zero risk in it, right? Government can definitely pay the loan. Mr. Mallya, high risk. MSME also moderate level of risk, right? So all are assets, but all the assets are having different risk, and that's why we do have to consider the risk weighted assets. So those assets that are having high risk will be assigned a higher risk weight, and accordingly if your risk weighted assets are quite high, you need to keep more and more capital. Because there are certain regulatory requirements for the banks that they need to maintain capital adequacy ratio, good amount of capital adequacy ratio. The problem with CAR is whenever your risk weighted assets go up, let's suppose you are giving more and more risky loans. So I can say that your numerator is constant as of now, but your risk weighted assets are going up. So I can say that your capital adequacy ratio will be quite low. Numerator is the same only, but the denominator is going up. So naturally, if the denominator is going up, mathematically your CAR will be lower, right? And that's a problematic situation for the bank. So the correct answer here is option C, capital to risk weighted assets ratio. Next one, question number 5. When the RBI purchases government securities under the open market operations, it is generally resulting in what? Reduces the liquidity in the banking system, increases the liquidity in the banking system, increases the CRR, reduces the repo rate automatically, or reduces the fiscal deficit. Again a very simple one. Now these steps RBI has actually taken recently, and that's why they asked it in the examination. When I am saying recently, I am saying that in 2025 also RBI have taken several steps, and because of that this question was there in the examination. So what should be the correct answer here, guys? What should be the correct answer here? The correct answer here will be, guys, when RBI is actually purchasing the government securities. So banks are having government securities. RBI is purchasing the government securities from bank. Now if you are purchasing something from someone, you have to pay the money. So RBI is actually injecting liquidity, infusing liquidity into the banking system. So I can say option B is the correct one. Increase in the liquidity in the banking system is the correct answer here, right? Option B. Next one, an inverted yield curve generally indicates what? An inverted yield curve generally indicates what? Now this, I will say, was a tricky question for those who don't understand the concept of yield curve. Okay, yield curve is a very important concept, and recently I have done a detailed video on yield curve. I would like to request all of you to please do watch the yield curve video on YouTube. I'll also share the thumbnail of that, title of that, so that you can easily search for that video. It's a very amazing video explaining each and every concept related to yield curve in a very simplified manner to all of you, right? So when an inverted yield curve is there, that means the short term interest rates, there are two things, short term interest rates and long term interest rates. The short term interest rates are usually lower than the long term interest rates. And why is it so? it is obvious thing that in the short term the risk will be quite low as compared to the long term, just because we do have adequate time for the things to go wrong in the long term. And that's why we say that whenever an investor is investing for more than a year or two, then long term interest rates are quite higher than the short term interest rates. And that's completely true. Go to a bank, do an FD for 2 months, 3 months, 6 months, you will be getting lower interest rate. But whenever you are investing your money for longer period of duration, the interest rates will be quite high, right? So what is an inverted yield curve generally indicate? When the short term interest rates are more than long term interest rates, it is a problematic scenario for the economy, and that's why option C, that means possible economic slowdown or recession, is there in the economy, right? So option C will be the apt choice. And what is the meaning of this inverted yield curve is and a flattening of yield curve is? You can watch this detailed video. It's a 30-minute video where I have explained each and everything related to bond yield curve flattening, inverted yield curve concept in this particular session. So it will be very, very helpful for all of you to understand each and everything from this video, right? If I start explaining this concept in a detailed manner, so this PYQ session will be, this simple question will become a 30-minute question. So I don't want to do that. There is a separate video for this concept. You can definitely watch it. Okay, it's there on YouTube. Next one is a para based question. So they will be giving you certain paragraph and they'll be asking you questions around this paragraph. Okay, most of the times you won't be finding the answers of the question in this paragraph. So that's totally fine. Okay, that's totally fine. And what should be the approach in the examination? First you will be reading the question and then you will be reading the para. Sometimes it's like a finance current affair question, so you don't have to read the entire para to answer the question. But as of now, I am reading the para line by line, okay, for all of you. But in the examination, once you are pro, then what you have to do, you have to directly jump to the question. If you know the question, just directly mark it and go ahead, right? Just take a brief understanding of para. Until and unless you don't know anything, you can just read the para in a brief manner, okay? If you don't know anything, then you need to at least check the para whether whether the hints are also there in the para or not, okay? Sometimes you will get the hints, sometimes you won't, okay? So at least try to read the para in a summarized manner. So let me just quickly read it for you. So infrastructure development, so this is all about infrastructure, is critical driver of economic growth. And whenever we talk about infrastructure, NaBFID is the infrastructure related development financial institution. What is a development financial institution? It take care of the development of a particular sector. Let's suppose infrastructure, so NaBFID is there to take care about the infrastructure, right? Because banks are not interested in usually lending to the infrastructure development loans. Why? Because they are quite long in tenure size, right? And banks are not comfortable lending for 10 years, 20 years and so on. And that's why we do have a specialized financial institution, development financial institution, NaBFID. It is a all India financial institution as well, right? So infrastructure development is critical driver for the economic growth, productivity enhancement and the employment generation. However, financing large scale infrastructure project poses significant challenges due to long gestation period, high capital requirement and complex risk profile. In this context, the establishment of NaBFID, National Bank for Financing, Infrastructure and Development, represents a structural reform aimed at strengthening the India's long-term infrastructure financing framework that we discussed. NaBFID functions as a dedicated DFI, Development Financial Institution, designed to address the gaps in the infrastructure funding, and traditionally commercial banks have shouldered a substantial portion of the infrastructure lending, often leading to asset liability mismatch. Obviously, because the loans that you are giving to the infrastructure companies are quite long term in nature as compared to the deposits that a bank is getting, right? Due to the long term nature of such projects. By creating a specialized institution focusing on the long term capital mobilization and the project financing, policymakers aim to improve the financial stability while supporting sustained infrastructure expansion. The institution seeks to catalyze the private investment by de-risking projects, providing credit enhancement mechanism and facilitating innovative financing structures. It plays a complementary role alongside the banks, capital market and multilateral institution. In doing so, NaBFID aligns with broader economic objectives such as improving the logistics efficiency, urban development, energy transition and digital infrastructure. So this was the paragraph, guys, right? The question is, as per the latest data, NaBFID has made total sanctions amounting to more than, now this is a complete finance current affair based question, right? And I will say nothing is there in the paragraph if I talk about the data point, right? So if you know, you know. You don't have to read the entire para, just directly jump onto the questions and then read the para later on if there is a hint or not, right? If you know the question, just mark it down. But as of now, because we are doing this session in a structured manner, I am not giving an exam as of now, right? Or I am giving a mock test, it's not like that. As of now, we are just solving a paper, so I am just reading the paragraph to give you the context and then I am moving to the questions, okay? So please tolerate this habit of mine for the time being, okay? So as per the latest data, NaBFID has made the total sanctions amounting to more than how much? The correct choice here will be option C. Option C, 86,804 crore is the total sanctions made by NaBFID. Okay. Question number 8, NaBFID is expected to sanction over how much amount by March 2026? Again a finance current affairs based question. So your finance will be in a mix of static plus dynamic. NaBFID is expected to sanction over how much amount by March 2026? The correct choice here is option D. 3 lakh crore is the target. 3 lakh crore is the target to strengthen the long-term infrastructure financing in India. Now we have a statement based question. We are having 3 statements and you need to identify which of the following statement is or are correct, right? So all these statements are related to NaBFID only. Just try to identify the correct statement. So over to you guys quickly in the comment section. What are the statements that are correct? Luckily in this particular question, if you don't know the role of NaBFID, the paragraph will help you find the role of NaBFID and answer you the question as well. So here it is definitely sorted. Statement number 1, NaBFID was set up in April 2021 as India's 5th All India financial institution. I already told you that it is an AIFI. It supports long-term non-recourse infrastructure financing, including the development of bonds and the derivative market related to the infrastructure sector. It functions purely as a commercial bank without any developmental objective. Now you know, this is a question that you can easily answer even if you don't know much about NaBFID. Still, I will say if you know nothing about NaBFID, then you have to read the paragraph, and then still, even if you don't know anything about NaBFID, after reading the para you can answer this question, as NaBFID is actually a development financial institution mentioned in the paragraph. So it is a development focused bank, right? So I can say a financial institution, not a bank. Okay. So option B, that means first and second statement are correct, right? Third one is not correct. So option B is the correct answer here. Next one, last question related to NaBFID. Consider the following statement regarding the NaBFID's capital structure. The authorized share capital of NaBFID is dash. How much is the authorized share capital? How much the government of India has actually infused in NaBFID as an initial capital, and government of India has also given a grant to NaBFID. Fill in the blanks. Over to you guys in the comment section. Quickly. Please do let me know in the comment section what is the correct choice here. What will be the correct choice here? Any idea? The correct answer here will be, guys, option B. 1 lakh crore is the authorized capital, 20,000 crore is the capital infused by the government, and 5,000 crore is the grant from the government. Okay, option B is the correct one. So those who know about NaBFID, definitely 3-4 questions were directly from NaBFID. Okay, next one, read the following para carefully and answer the following question. Now this is a question related to ratio analysis. Super important topic for your examination, super important topic for the examination perspective. It was recently introduced in the year 2023 in the examination in your syllabus, basics of accounting, financial statements and ratio analysis. I will say RBI has started asking numerical questions also from now onwards, and that's why in the paid session I start my class from the numerical questions only. Okay, so let's try to understand the data. Reserves and surplus 6 lakh, equity 4 lakh, debt to net worth ratio 0.5%, right? 0.5, sorry, not percent. So debt to net worth 0.5 is given, asset turnover ratio 2:1 is given, gross profit is 30% of the sales, right? Gross profit is 30% of the sales. What do we have to calculate? The very first question is, what is the total debt? So guys, these kind of questions which are quite scattered in nature, what I will advise you guys is to first prepare the balance sheet. Just try to prepare a rough balance sheet of the data, right, with the help of the data given. So if I just try to prepare a balance sheet, so you have been given the equity, so I'm just writing equity here, 4 lakh rupees, right? That's my equity value. Then I do have reserves, so reserves and surplus 6 lakh rupees, that's also a part of liability, right? Then I don't have any figure, I have just the relationships. What are the relationships? Debt to net worth 0.5, asset turnover ratio 2:1, and then the gross profit 30% on sales. I don't have the sales as well, right? So all these information have been given. So what I'll try to do is I'll just try to apply some formulas, right? Some numbers have been given, the answers have been given, right? The ratios have been given. I just have to ascertain the formula, and then let's try to do some work like how we can proceed further. Okay, how we can proceed further. So the very first question is, what is the total debt? What is the total debt? So as of now, no debt is given in the question, but I know that there will be some debt. Why there will be some debt? Because the question has clearly asked you that what is the total debt. So definitely I can say that debt is there in this particular business, right? And they have given the relationship as well, which is debt to net worth 0.5. So what is debt to net worth? Debt divided by my net worth. Debt divided by my net worth, right? Which is 0.5, which is 0.5, right? So can I say that if my net worth is 1 rupee, my debt will be 0.5 rupees? I can say that, right? That's what it means. Having debt to net worth ratio as 0.5, that means if my net worth is 2 rupee, my debt will be 1 rupee. So can I say that my debt is just half of my net worth, right? The debt is just half of my net worth. That's what I can conclude. What is net worth? Net worth is nothing but equity shareholders fund only. Net worth is nothing but equity shareholders fund only. So can I say that? Can I say that I know my net worth, which is 6 lakh plus 4 lakh, 10 lakh. I don't know my debt, but I know that my debt to net worth ratio is 0.5, right? So this 10 lakh rupees, this 10 lakh rupees is my net worth, and my debt will be just the half of the net worth, because my debt to net worth ratio is 0.5, right? So I can say that my debt here will be how much? Half of my net worth, which is 0.5 of my net worth. My net worth is 10 lakh rupees. So my debt will be here 5 lakh rupees. My debt here will be 5 lakh rupees. So this I have calculated, right? This I have already calculated. So the correct answer for the first question will be option C, 5 lakh rupees. 5 lakh rupees. Now you can argue that, sir, debt is 5 lakh rupee, but what about current liability? You must be having some current liabilities as well in the question. So what about that? But I don't have any such information here, so I will assume that my current liability is nothing, right? My current liability is 0 here. So now one more thing I can conclude, that the total of my liability side now will be 15 lakh rupees. 15 lakh rupees is the total of my liability side. So whatever the total of my liability side is will be the total of my asset side is, because asset is equal to liability plus capital. Asset is equal to liability plus capital. Now I came to know that my assets are the total of my assets are also 15 lakh rupees, right? Now I have been given the asset turnover ratio of 2:1. My asset turnover ratio is 2:1. What is the meaning of asset turnover ratio? The meaning of asset turnover ratio is my turnover, which is nothing but my net sales. My turnover divided by my assets. My turnover divided by my assets is equal to 2 times, right? That's 2 times. That's what is given in the question. Now I know my assets. I don't know my turnover, but I can easily ascertain my turnover now because I know my assets. My assets are 15 lakh rupees, right? The total assets we have already calculated. So that's the importance of placing the numbers in the balance sheet so that you can definitely proceed with the question. So total debt wala question I have already answered, 5 lakh rupees. Total liabilities wala question, we have by default answered the question. That's total liability, which is option B, 15 lakhs. That is the total of my liability. The total of my asset will also be 15 lakh. The next question is, what is the gross profit? What is the gross profit? Sales ka 30% is gross profit, which is given in the question, which is clearly given in the question. Now I don't know my sales. I don't know my sales, but I can easily calculate my sales by using the asset turnover ratio, right? By using the asset turnover ratio. So my turnover divided by the assets 15 lakhs is equal to 2. That means my turnover will be equal to 30 lakh rupees. This 15 lakh will go on the right hand side and my turnover will be 30 lakh rupees, right? So I can say my turnover is 30 lakh rupees. Now I can easily calculate my gross profit. What will be my gross profit? Can anyone tell me quickly? 30% on sales. Sales is 30 lakh rupees. Sales is 30 lakh rupees. So my gross profit will be 30 lakhs multiplied by 30%, which comes to 9 lakh rupees. Option C is the correct choice here. So this is how we are going to do the ratio analysis wala question. Now this was not a simple question. It is an advanced level question. By advanced level, I mean that it is not at all a difficult level, but first you need to know the basics and then only you can solve the advanced questions. Okay. And always I start my class with basics of finance, accounting and ratio analysis only, because I personally feel this is one of the most important topic. Plus the weightage is going to increase only in the coming years. Okay. Now let's move to the next question. Again a para based question. Efficient functioning of the government securities market is essential for the macroeconomic stability, effective monetary transmission and public debt management. In this context, the negotiated dealing system NDS-OM, negotiated dealing system order matching. Now I have already marked this particular platform important. Why? Because this was one of the most important stuff in the year 2025. Platform represents a significant step towards enhancing the transparency, liquidity and efficiency. It's an electronic screen-based trading platform that facilitates anonymous orders matching in the government security. So it is for the government securities. By replacing the traditional voice-based negotiation With a centralized electronic system, it has strengthened the price discovery and reduced the information asymmetry. So, some of the benefits of the NDS-OM platform is also given in the para. Such digitization enhances the market depth and promotes the greater participation by the institutional investors. The platform plays a crucial role in supporting the RBI's monetary policy operation and Government of India's borrowing program. A well-functioning secondary market for government securities ensures smooth transmission of policy rate and enables the efficient management of the public debt. Improved liquidity in the government security also contributes to the development of the reliable benchmark yield curve, which is critical for pricing the corporate bonds and the financial instruments. From financial stability perspective, the electronic trading platforms like NDS-OM reduce the operational risk, improve settlement efficiency, and enhances the regulatory oversight. The integration with the clearing and settlement system strengthens the systematic resilience and promotes confidence among the market participants. So, this is the paragraph, guys. The very first question, which is completely irrelevant from the paragraph, is gilt account holders can access the NDS-OM through which of the following facilities. So, it is deep within the concept of NDS-OM, which is not at all relevant, which is not at all related to the paragraph. So, what do you guys, what do you think should be the correct choice here? Any idea? Any idea about this one? What do you think, which option will be the correct here? The correct choice here will be, guys, option B. Internet based NDS-OM web module is the correct choice here. With reference to the NDS-OM, consider the following statement. The number 1 statement: NDS-OM is a screen based electronic anonymous order matching system for secondary market trading in the government securities. Option 2, statement 2, membership of the system is open only to individuals and retail investors directly. Statement 3, entities that maintain subsidiary general ledger SGL account with the RBI are permitted to become primary member of the NDS-OM platform. Which of the following statement is or are correct? Which of the following statement is or are correct here? So, you just need to identify the correct statement from the following. And guys, the correct statement here is option C. First and third are the correct statement. Okay, second one is not correct. Second one is not correct. NDS-OM contributes to monetary policy transmission primarily by fixing the lending rates, managing CRR requirement, ensuring efficient price discovery in the government securities, regulating the equity market volatility, or providing direct loans to MSME. So, some of the options were actually not so very well framed, or maybe the students were only able to recall these options. The correct option here will be option C, ensuring price discovery in the government securities. Okay, option C was the correct choice, right? Next, and the last paragraph based question for today is related to the TReDS, trade receivable discounting system, right? So, let's quickly discuss about this as well, guys. Okay, so this is not the last question. So, we are having 2 questions related to TReDS, and then we'll be having one more para based question based on infrastructure investment trust. Okay, so let's discuss this one first. Timely access to working capital remains one of the most critical challenges faced by the MSME. Delayed payments from the buyers, particularly large corporations and public sector entities, often strain the cash flow and restrict the growth potential. In this context, the trade receivable discounting system represents a technology-driven institutional mechanism aimed at improving the liquidity and reducing the credit constraints for the MSME. The TReDS is designed as an electronic platform that facilitates the financing of the trade receivables through the MSME. So, you can get your trade receivables discounted through this particular system. By enabling the digital uploading, acceptance and discounting of invoices, the system enhances the transparency, efficiency in the receivables financing. The presence of competitive bidding among the financiers improve the price discovery and ensure that the MSME receives fund at market determined rates. From a financial ecosystem perspective, TReDS reduce the information asymmetry and lower the transaction cost. It shifts the credit risk assessment more towards the buyer credit profile rather than the MSME supplier. Now, most of the things in the para is not at all related to the questions. TReDS contribute broadly to the economic objective and the cash flow cycle is again fixed by the TReDS. If we look at the questions, how many entities are presently operating TReDS in India? And that's why I say that you always have to start with the questions. If you have started with the questions, then it is totally fine. The correct answer here will be, guys, option D, 5. Okay, so as of now 5 entities are there which are presently operating as TReDS in India. Next one, the monetary limit for mandatory onboarding the TReDS for corporates and CPSEs has been reduced to a turnover of what? So these were the finance current affairs based question only. The correct answer here is option B, 250 crore. Okay, 250 crore is the right choice here. Next one is related to infrastructure investment trust. Please do remember INVITs and REITs, real estate investment trust. These topics will remain super important for your upcoming examination 2026 as well. Okay. So infrastructure development requires substantial long-term capital and stable financing structure. To bridge this financing gap and attract the diversified sources of funding, regulatory framework have been introduced to facilitate the period of investment, to facilitate the pooled investment vehicles. In this context, the SEBI infrastructure investment trust regulations were there, providing a structured mechanism for deploying the capital. The INVITs are investment vehicles that enable the sponsor to pool the income generating infrastructure assets and offer units to the investors. So many investors can collectively invest in the trust, and that trust is again working as an investment vehicle investing in the infrastructure projects. So it's a regulatory framework which seeks to ensure transparency, protection of the investors and efficient governance. By mandating clear valuation, reporting and distribution policies, the regulation aim to enhance the credibility and investor confidence. INVITs help unlock value from operational infrastructure project, and they also allow developer to recycle the capital into new projects. Again, this structure broadens the participation of the institutional framework such as pension funds, insurance companies and so on, but the question was completely unrelated from the para. As per the SEBI Infrastructure Investment Trust regulation, the INVIT is required to invest at least what percentage of its asset in the revenue generating infrastructure asset. The correct choice here will be, guys, option D, 80% is the correct choice here. Next one, what is the minimum net worth required for a corporate body, for the body corporate, LLP or a company to qualify as a sponsor of an INVIT? The correct choice here is option C, 100 crore rupee. 100 crore rupee is the correct choice, right? So the questions were, I will say, asked more from the static portion. Dynamic portion was also there, but yes, static portion was also there. So the trend, RBI has broken the trend already. They used to ask more dynamic and less of static, and now I will say static plus dynamic was asked in the examination. Plus numericals were also there. So I have seen so many videos where, you know, faculties and People are saying that no numerical will be asked. There is a trend of RBI of not asking more and more numericals. That trend is also not there, guys. There is only one trend, that there is no trend, right? And good coverage of syllabus was there. RBI actually covered the syllabus well. Learnings for the 2026 RBI Grade B examination, there should be balanced approach and not the selective, right? There is only one trend, that there is no trend. So please don't follow any trend. Stop following the trends and start your preparation as early as possible. Basics of accounting, financial statements, ratio analysis still will be the important topic for 2026. Don't think like there are 3-4 numerical questions. So no numerical question will be asked in the 2026, or chances of getting a numerical question is less. No, that's not at all the possibility. You have to definitely do the numericals very well. Okay. So don't have any fear from the numericals. Increasing coverage is definitely increasing your chances of getting selected, right? So the more you study, the more topics you cover, definitely the brighter your chances will be for the selection. And plus, no separate preparation for static plus dynamic. The static plus dynamic will always go hand in hand. And guys, if you are looking for a paid course, then this is the paid course for you. This is the RBI Grade B 2026 complete course preparation. You will be getting the physical books as well. Okay. Later on, you can check out the course highlights as well. I teach finance in this particular course. Thank you so much, guys. Bye bye. Take care. See you soon in some other video.